Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the number of charts that are here behind me. And so this video is kind of an experiment. I am going to be going over my trading plans for the next week, going over stocks that I hold or would like to pick up, levels that stand out to me. And the reason I'm doing this is because there are now members for the channel. It costs 99 cents a month to join, and I want to create value for those members. And so I thought this could be a really nice way to do it. So if you are interested to learn about what I plan on doing, some levels that really stand out to me that could be helpful for you, join the channel, become a member. It is 99 cents a month. And I'm going to be trying to do these videos every single Saturday to get my plans lined up before the week starts and to have it out on Saturday so you can get your plans together on Sunday before the week starts. And so, if you are interested in that, there should be a link below and or wherever I post this to become a member of the channel. Like I said, 99 cents a month should be a great time, great deal. And I have to say thank you so much to the members for joining, and thank you to the community for suggesting that I do this. It's been interesting trying to figure out how to add this value, and I think this is going to be a great way to do that. And so for this video, just to give kind of like a little bit of a teaser, I am going to be covering these stocks. Some of them, these ETFs at the bottom, I may not get into great depths with, but the ones at the top, I'll be going over my plans with them as well as a couple additional ones like American Airlines, like Biora, Therapeutics. I think those are the other ones that are not on this list. But yeah, I'm going to be doing that. And so if you would like to find out what I'm doing, you should become a member. But anyways, with that being said, I am going to get into the charts and get into what I plan on doing for the day. And I have to note, I'm not going to be editing this video, so I apologize for that in advance, but I just wanted to have this out to you guys, and you can let me know in the comments if you did enjoy this. I will be putting timestamps to all of the tickers down below, so it should be easy for you to navigate through it. If you want to watch all of it, that's great. I think there's some really nice setups that I'll be going over that could be helpful for you, but I understand that you might just be interested in some specific stocks. Go right to them. I'm making this video for you guys. Thank you so much for being members. I really, really do appreciate it. But yeah, so getting into the charts, the first one I'm going over is American Airlines. I believe I had mentioned this in the Discord. I actually made a video on it when there was this gap down that I saw. If I flip over to the weekly time frame, or I could actually do the monthly time frame, this uptrending level that had acted as support, I expected price to bounce from there. And so I had opened up a call with a $10 strike back here. And as you can see, prices just faded down. The contract expired on yesterday, on the 19th, and I was going to let it just expire, in the money, so I'd get a little bit of that money back, but I had lost money on it. But because earnings are coming up on the 25th, I believe that's I believe that's Wednesday after hours. I'm not exactly sure. But because earnings are coming up, I decided to roll the contract to 2 Fridays from next Friday, or I guess 2 Fridays from now. So expiring on August 2nd. And so here, looking at the options table, 4 calls, $10 strike price to buy one of those contracts, $86. And so my average cost effectively is, I think, around, let's see, I can actually check this in my spreadsheet. You guys won't see it, but it's going to pop up on my screen so I can give you the exact number, what my average is. It's high. $218, one contract based on, I actually rolled it twice, I believe, or maybe just once. Nope, I only rolled it once, but yeah, it was $190 initially because I bought it around $12 a share right after this gap down. So when, price was near $12. And so, yeah, I think that's kind of a gamble. I think I'm probably going to lose money on it, but I wanted to extend it by a couple weeks just to see what happens around earnings. I think that, the bottom is likely in, and I just didn't want to accept a loss at a bottom. I feel like that's the time when people do it. So I just extended it by a couple weeks. I think it cost me an additional like $35 to roll that call. And yeah, so I have a sell order at a strike, or sorry, not a strike, a bid price, I guess, of, let's see, for the $10 strike, this number is $2 in, I think actually 19 cents. So $219 is what I will get if that fills. I suspect it won't, and I'm going to have to accept some loss, but I just kind of wanted to hold onto it through earnings. Definitely a gamble, but I wanted to see what happens. This is all about learning, and part of learning is making mistakes. And so, maybe this is something you guys are interested to watch, see what happens with earnings. I am hoping that it goes up to like $12 a share, because then that contract would be worth around $200, because it is a $10 strike, $12. $2 above that, 2 times 100, $200. So that would be excellent. But who knows? We'll have to see. But then, that's all that I have with American Airlines. I don't have any shares, and I don't plan on exercising that call. I just don't want to spend $1,000 to get 100 American Airlines shares. And one of the reasons for that is because every time I make a video on American Airlines, it's just not popular. People don't like it. So to me, it's one that, I can just kind of ignore. One that does get a good amount of views, moving on to the next ticker, but actually hasn't recently, is AMC. So I'm not really going to go over the chart too much. I just did a video on this, but I wanted to go over, basically, I have a number of shares, and so I wanted to go over covered calls that I plan on selling. And so let's see here. This is just a screenshot from a spreadsheet. I'm going to pull over so you guys can see it. This is all of the covered calls that I either plan on placing or already have placed. And so at the top of the list, you can see AMC. And so I have tons of shares, more than I ever anticipated holding. And so, I feel fine selling covered calls. I don't think the price is going to close on these expiration dates above these prices. If it does, though, these prices are above my average. So it's a way for me to trim my position without getting into the emotions. 100 shares at, this is $1,000. I got bills. Everybody's got bills. So that would be nice for me to have if it did close in the money, forcing me out of the position. But I also, note here that I have strikes. I don't have them stacked at the same strike price because I don't want to end up getting pushed out of my position. But if I am to trim, that would be nice. I'd have a little bit of cash on the side. So I think that'd be good. So basically the strikes that I have here, these I have 0 shares because that's just kind of a placeholder. I'll add more. I'll place these orders as days go on. I just don't want to be doing a number of calls on Monday in case maybe on Monday price goes up, and then these orders would then be going down in value, or the value that I'd be spending to get them, or that I'd be getting, the premium that I'd be getting would be going down. And so here, basically, let's see, I can. Here, I just have to figure out how to juggle these screens. So let's see, AMC, the strike of $10 for this coming Friday, so July 26th. So let's look at that. I believe it is 1 cent. And so let's see here, $10, is 1 cent to sell. And so the reason, actually, I'm looking at that and I'm thinking maybe I should place this order at one of these higher strike prices. So actually I do have one. See, 11.50 here. That is the highest one, but I also wanted to, in case that doesn't get filled, I also have one at 10. And that's just to kind of manage the emotions and to just kind of force me out of a position. Or to trim my position, I should say, not force me out of it. I still have plenty of shares. And then I do have one contract for the following week. That is the $10.50 strike. So just flipping over to the next options table here for the date of August 2nd. We can see, let's see, I'm just going to flip back over to this. $10.50 strike. So that's sell 5 cents. So I get $5 for that. And so that's basically the only reason why I have that, just because I can collect that nice amount of premium. And so these are red because I have not placed the orders yet because covered calls on AMC just expired. And so I need to be placing these orders now that the shares have become available, or they will become available in the pre-market on Monday. And so that's when I'll be placing those orders. So that's kind of my plans with AMC covered calls. I will be adding more covered calls over the course of the week, either the coming Friday, July 26th, or the Friday after that, August 2nd. I just don't want to go beyond 2 weeks because maybe AMC squeezes and I don't want to be going out way too far with a strike of, $10.50 if AMC's trading at $20, who knows? So I just kind of want to manage my trimming by doing, just one covered call at a time, which represents 100 shares. So that is AMC calls, but I also did want to go over a little bit with the chart. And let's see, I'm going to pull this up, another screenshot of this table. These are the trades that I do. This is how I organize it by a spreadsheet. Please don't judge if you think some of these orders are pathetic or you don't like them. I'm just working with the amount of funds that I have. I work just over 40 hours a week on average. I work 84 hours every 2 weeks. Full-time job, do YouTube on top of that. I work paycheck to paycheck because I put all that money into investing or, bills, whatever. Don't have too much of a social life because I'm spending all of my time doing this. And so, I'm just working with the funds that I have. And so for this coming week, I basically have about $900 to then deposit into my account. And so I'm just trying to divvy that amongst all of these stocks that I hold. And so with AMC, sorry for the big spiel there, but just kind of wanted to break it down, my approach here. But so with AMC, I only have one share addition. That's because I just have so many shares. I kind of wanted to spread that love, that, $900 amongst the other stocks that I don't have as many shares of. And so AMC, I just have one share. It's yellow, so I've placed this order at a price of $4.69. I would round this to my position being, 100 shares to be divisible by 100 shares. But I'm just doing one share at $4.69, and I might, with whatever leftover funds, be adding more if price does go down to $4.69. And so the reason why I chose $4.69 in the video that I just put out, I had done this Fibonacci retracement that's in yellow, and we can see the 786 at $4.63. These levels aren't always hit precisely, and so maybe we get a wick down, but it doesn't get to the 786. And just having fun with the price, why not $4.69? I'll add a share there, and then I can reevaluate, add more shares if I want to, or just do one share at a time additions. Super boring, not very exciting, but it is a good way to build positions, and that's effectively how I've built a lot of my positions, one share at a time, nibbling as things go down. But, with the cash secured puts and, some of these are larger orders, I'm not doing any cash secured puts this week because I want to get my positions to be divisible by 100 shares, and then I would be adding to them in 100 share increments by cash secured puts. So that's just kind of a note there. But so AMC, just one share there. Another stock that I'm not really going to spend too much time on, but I feel like that's, everything with AMC. I'm going to wait for $4.69. But so the next stock that's on the list here that I hold is Aquestive. I had, during a stream, gone over selling I think I bought 100 shares to sell a covered call, and then price went down. So I've been holding the bag for a little while. My average price is $3.30. And so I have been selling covered calls. I just sold the covered call that expired on Friday with a strike of $3.50. I made $5 on that, nothing too exciting. But, this is one that I feel like is pretty speculative. I do feel like, it bounced from around 250 or, kind of like it did over here. So I feel like it could go up a lot more, but I just feel like I don't want to be spread too thin. This is not a stock that I'm really that invested in. Made some videos on it. They weren't that popular. So I don't really have a driving, need to make more videos on it. So I'm probably going to exit right around 330. Maybe I trim most of that position. So maybe I take $300 out. I have 100 shares and I leave $30 in, I guess about 10 shares to see maybe it goes up to 4 or, 6 or higher. But really, I just want to have this capital to use in other positions. I wish I had added down here, but I just didn't, spread too thin basically. And so with Aquestive Therapeutics, I really just want to get out of my position at break even, so like right around 330, but especially too, because there is this trend line that I'd previously drawn a while ago and we're at that, so it could be at resistance, but maybe it breaks above again. So I don't really know. I'm just not that invested in it financially, emotionally, or for the channel or anything, so I just don't really want to hold it. So yeah, that's kind of my plan with Aquestive, to exit or just to hang out and see if price does go a lot higher. But yeah, and so the next one on the list here is another therapeutics company, Biora Therapeutics. And so this one, I should mention the ticker symbols. I haven't been doing that. Biora, B-I-O-R, ticker symbol B-I-O-R. I have done a number of videos on this, but it just wasn't that popular, so I don't really cover it too often. This is one I hold hundreds of, if not more than 1,000 shares of, so I sell covered calls on it. And that's all I do with it. I'm not adding. If it does come down more, or what I might do, and actually this is an interesting one as an example for a cash secured put, so I'll go over that in a second. But my plan basically with Biora, let's see, this is for covered calls. I've got all of these call orders placed. They're monthly contracts, so kind of lame, and they're always in 5-cent increments, so I can't make these orders at like 2 cents or 1 cent like I have with AMC. They have to be in 5-cent increments, and because of that they don't always get filled, and so I just have all of these orders placed. I guess you can count here how many shares I have effectively, because I believe this is all of the orders that I have. Actually, I have probably more shares than this, because I have some calls with these expirations that I'm holding, or covered calls I should say. I do these strikes because my average is less than $2 a share. And so if these close in the money, it's just a way for me to trim my position. If it closes, even higher, I have some of them filled at, I believe, $3 strike. That's me making some money if they close in the money. So that's great for me. But yeah, basically I've just done the increments that are available in the options table, $2, $3, and $4, going up to October 18th. There are some, I believe, for January, but October 18th is the last month for 2024. And so that's really all that I'm extending it to. And then every week, basically this one has been getting filled, the $2 strike for the expiration on October 18th. Those have been getting filled every week. I just do one every week, and I will update that. I do have this order placed, but I'd much rather sell those shares at $3 or $4, so I am placing other calls at these other strikes, just kind of staggering it, and whatever fills is great. Unfortunately, I haven't had many filled with the August or September expirations, but I am hoping that some of those do fill to trim out of my position if price closes above $2, $3 a share on those dates. But if it doesn't, that's fine. This is just a way to attempt at least to make a little bit of money holding the bags that I do have. But yeah, so this is all that I'm doing with Biora, but I did want to go over selling cash secured puts, because this is something that I am learning as I do it, and I recognize that selling cash secured puts could be a nice way to pick up Biora shares, even though, the options table, if I look over at the puts, let's say for August 16th, so that's the next expiration, the $1 strike, in order to sell a put, sell a cash secured put, I would get 0 premium here. There's nothing, even though price is 34 cents below that strike of $1. That's just because it's a month out, it's a ways away. So they're just not worth anything right now. Whereas, with the $2 strike, it is worth, 115. And so what I think I might do is, if I end up having some capital on the side right now, I don't really, because I'm have it assigned to positions that I'm going over in this video. But with Biora, let's say, I think from this retracement that price could be coming down to the 786. That's around 54 cents. Or, let's say margin of error, maybe it just comes down to this golden pocket that's around 60. Actually, no, let's be kind of strict with this. 54 cents. But let's round up to, let's say, 55 cents. And so let's say there's a put with a $1 strike, price is below $1, so it seems likely that it will close below $1. I would not want to sell a cash secured put for a premium less than 45 cents, because 45 cents plus 54 cents equals $1. That would effectively make my average buy of those 100 shares 55 cents. So that's the 786. That seems appealing to me. So what I would do, I have not done this. I might do this next week. But what I might do is just place an order to sell a put with a $1 strike and have this bid price set to my limit order price set to 45 cents. So then I would have to have $100 to buy 100 shares at $1 if it closed in the money, minus 45 cents times 100, that's $45. I'd have to have $55 set aside to pick up 100 shares effectively at 55 cents. So that's something that I might do, just place the order, not necessarily expecting it to get filled, but that would be a nice way to just set it and forget it, have my, $55 set aside, and, then that cash secured put might get filled. Maybe price dips to that level and then goes up. And then I would just be collecting that $45 premium if price closes above $1 a share by that expiration. If it doesn't, then, I just get 100 more shares at 55 cents, which is a good price based on the chart here. So, I feel good about that. So that's kind of my strategy with Biora, but I'm not implementing it as far as cash secured puts go, at least not this week, but I likely will either next week or the week after. We'll see. You'll find out in these videos. But then the next stock on this list is ChargePoint. This is another one like AMC that I own a lot of shares of. I was thinking that I would do something like that, like I was just talking about with Biora, with cash secured puts, with an effective buy at $1.86, given that that's the 236 from here. I might actually, what I should probably do is, I'm just going to do it right now with you guys, draw a Fibonacci retracement from the low here at 128 up to the high of 244. That miraculously was lined up just right. I'm just going to color this yellow so we can see it a little bit different, a little more clearly. And so, yeah, I could see a price coming down based on that new retracement to like 152, 153, the 786 here. But, I could also see it bouncing from this downtrend, finding that as support. So, I am more hopeful that it bounces there. But if it does break lower, then, then I could get more aggressive with a cash secured put. But like hypothetically, I'm not doing it this week. If I were to want to pick up 100 shares at a price of $1.86, but, open to the possibility of price bouncing and just collecting premium. So $2 minus 186, that's 14 cents. So what I could do, looking at the puts for the July 26th contract expiration, look at the $2 strike, and I could sell one for, 14 or maybe 15 cents. And that would then effectively put my average right around this 236 line here, which is also the 50% retracement from this yellow one. So I find that pretty interesting. 186. And so I'm looking for price to bounce around there, but I just don't want to be adding, 100 shares to my position. So just like with AMC, again, not that exciting. My plan is, let's see, where do I have it? Is to just get one share at 186. I'll reevaluate. And so when that does fill, I assume it will, since price is only 10 cents above that. I think it's going to hit 186. And so with that being said, if this does get filled, I'll reevaluate, I'll add more. But really, I just want to have, my capital set aside for these other positions that are pretty small, that I'd rather have be bigger so I can sell covered calls or, just build positions with cash secured puts rather than just doing incremental buys one share at a time, stuff like that, keeping my positions divisible by 100 shares. So that's kind of what I'm thinking with ChargePoint 186 buy there. And then also, looking at the covered calls. Let's see. These are not placed because I had contracts that expired just yesterday on the 19th. And so I need to wait for those to clear pre-market on Monday. And then I can place these covered calls. And so, looking at these, my average is below 250. So that's why I have strikes ranging from $2.50 to $3 just to pick up a little bit of that premium, either with expirations for July 26th, this coming Friday, or August 2nd, the one after that. And, that's just really to pick up that premium there and to force myself to trim out of my position so that I can use that money for other stuff, whether that's bills or, other stocks that I'm interested in. So that's basically my strategy with ChargePoint. So hopefully that's useful. I'm going to try to actually pick up the pace a little bit because this is 25 minutes and I'm still in the, upper part of the alphabet for my positions. But the next one on the list is Chewy. I did pick up a position with Chewy, I believe at $24.96 is my average. It's just one share, but really just kind of having fun around the, Roaring Kitty stuff. And, I see everybody's porches. They've got Chewy boxes on them. I don't have a pet, so I'm not a customer of Chewy, but, the business makes sense that they're getting veterinary clinics or whatever that are, in person, not online. I think that there's a lot of promise with this business. Everybody loves their pets. I've heard that, a business like this is recession proof because it doesn't matter if we're cutting corners with the bills or, I'm not, let's say, going out to treat myself as much, but I still got to feed my pet. I always got to feed my pet. So, Chewy, which I should say ticker symbol CHWY, is kind of safe in that respect. And so, yeah, I just want to, be, again, nothing too exciting, add another share to my position. And so here looking at, my buy price, $24.94, just one share. It's red because I haven't placed the order yet. I need to... I need to wait to deposit more cash before I do that, which I'll do pre-market on Monday. So $24.94, why did I pick that level? I think, just because of this yellow line that I have drawn here at $25. Seems like there might be some support there. I could definitely see price going lower than that, but this is also one, it's kind of a fun one, because of Roaring Kitty and stuff like that. So, I'm happy to pick up more shares, and actually $24.94. I think I just picked that because rather than doing 25, that would increase my average. Getting it another share at $24.94 would then put my average at $24.95, which is now at $24.96. So nothing too exciting there, but that is kind of my strategy with Chewy. But I could definitely see price going to the 618, around $24 a share. But actually, thinking about that, and that there have been higher lows formed, maybe price wouldn't be getting down to $24 a share because that's getting awfully close to these lows here, $23.62. So yeah, getting to 24 I think would be a little bit close. So I think that's why, I decided on $24.94 for Chewy. The next one on the list here, this is not an exciting one. Some of you know I hold this. Fisker, which has been delisted. It's practically worthless right now. I don't plan on doing anything with this. I think I got 700 shares still, virtually, worth nothing. I'm just going to hold them, and I'll wait until I have, a really profitable month, Or, if I'm very green for the year at the end of the year, I'll just sell the shares for lost harvesting. What is it called? As far as taxes go, harvesting the loss of this to then make my gains smaller effectively, to be claiming this as a loss. So I don't plan on doing anything with this until the end of the year, or until, let's say AMC squeezes. I have some massive gains from that or something. But yeah, nothing too exciting with this. This is garbage. Stock company makes me feel a lot more critical about the EV stocks. And that's also why I have been, pretty skeptical of Polestar. And wrongly so. Didn't go as low as I expected, and it bounced a lot. Could have made some money on that, but I just feel like a lot of the EV stocks are pretty speculative, and this is a prime example of that. But then, yeah, looking over at the next one on the list, GameStop. This is always a fun one. My average for GameStop, I believe, is below $22 a share. I don't think price is going lower than $22 a share. But I'd still like to add, just a little bit. I think I have about 27 shares, not a crazy amount. But let's see, not 100 shares, so I can't sell covered calls. I was making a lot of money selling covered calls before, but then one of those expired. In a lot of them, all of them that I had basically expired in the money. And so that was pretty disappointing. So good to be cautious with covered calls. But anyways, with GameStop, what's the level that I see this one coming to? Picking up one share at $24 a share. I did go over this in the GameStop video that I had just gone over from this, just like the AMC video or the chart that I just went over. The 786 is at $23.91. But let's say price doesn't get all the way down to that level. Just pick a round number, $24 a share, to pick up another share. And I forgot to mention this in that video, but I put it on the thumbnail. Roaring Kitty's average is $23.41. You're not saying that price is not going to go to that level, but I think it's going to be kind of tough to get much lower than it. And I do think, just like AMC, the other stocks I've talked about, putting in higher lows. So I don't necessarily think that price will be getting down to let's see, 22.31 again. And I think that the dip buying opportunity will be around 24. And so for me, again, not too exciting, just picking up one share to add to that position. And, it's going to raise my average, but, I'll then have more GameStop. I'm excited about the movement. I'm excited about the stock, the company, and, the community. So, so that's what I'm doing with GameStop. And then the next one on the list, also kind of, related to the meme craze, Hycroft Mining, partially owned by AMC. And so that's why I initially got into this company. I don't have a ton of shares, and I actually have a sell order for my shares at 314 pi. I just having fun with that number. And I should note, Hycroft is HYMC, ticker symbol HYMC. I guess you all will know that because of the timestamps that I'm putting on. So I probably don't need to mention that for all of them. Sorry about wasting that time. But yeah, so with Hycroft, this is one I don't have 100 shares of. And so I was thinking, rather than selling a cash secured put to pick up a lot of shares, what I could do, or I should say place an order to sell a cash secured put, because I would probably be setting it at a price that may or may not get filled. So that's going to be kind of my strategy with cash secured puts moving forward, as I have not been that disciplined about it. Like Luminar, I did a cash secured put with them last week, sold one, and my average buy for 100 shares is 214. Price is a lot lower than that now, so I should have strategized a little bit better. But yeah, so with Hycroft Mining at 255, I have a buy order for 86 shares. That would then put my total at 100 shares, and my limit price is 236. And the reason why I say that or have that price is because the 786 is at $2.35.6. Also, that does look like it was kind of like the top here for this consolidation. I'd think that there'd be support there. And, maybe price doesn't get down to 236, but, maybe I just place that order and then I can reevaluate next week. Maybe we close next week on the 26th at like 240. Maybe I say, yeah, screw it. I'll just buy those 86 shares at 240. But yeah, I'm just going to place that order there and just forget about it. I'm not going to buy individual shares or clumps of shares as price goes down. I'm just going to wait for it to hit 236. And if it doesn't, if it goes up to pi 3.14, then I'm just going to trim out of it, because, it's not that I don't believe in the company or anything. I just think that I get into a lot of speculative stuff, and, AMC, GameStop, Chewy, those are all kind of speculative around the meme community. And I feel like Hycroft is kind of like a derivative of AMC. I might as well just focus on AMC. But since I do have some shares of Hycroft mining, I might as well try to get my average down, pick up more shares, and see what happens based on a technical level. So that is the 786 from this retracement to 36. So that's what I plan to do with it. And then with those 100 shares, I could potentially sell some covered calls, at strikes that like $3 a share, and then I'd be making some money with that. So I think that's pretty cool. And then so the next one on the list is Luminar. I was just talking about this one a little bit. This is one that I, have been selling cash secured puts on, but my number of shares that I have is not divisible by 100. So I want to get that to be divisible by 100 and then continue to add. I'm bullish on the company, like the stock, and I think it's got a bright future. And so I want to be taking advantage of it while it's, below $2 a share. But I just don't want to be, getting too aggressive with it. And this is one, like ChargePoint, I feel like they're kind of similar in being speculative in areas that there are other stocks similar to them. But with Luminar, I just haven't been that aggressive with buying. So I want to be more aggressive now to accumulate more shares. And so with Luminar, the price that I have, I also selling some covered calls with them. So I'll go over that in a minute. But with Luminar, 48 shares would get my position size to be divisible by 100. And my limit price is $1.50. And that is, like all of these, just kind of based on the 786, this level here. Blue might be kind of hard to read the number there. The 786 is at a price of $1.48. Just rounding that up, maybe we get a wick down to $1.49. But that doesn't fill, but $1.50 is filled. And, just keeping it approximate there. So I haven't placed the order. As you can see, it is red, but that is what I plan to place starting, Monday, in order to get my shares up to be divisible by 100 there. And then if I look over at the covered calls that I plan on selling for this one, let's see, Luminar, I don't have a ton of shares, but, over the next couple weeks, $2.50, $3. Those are the strikes I'm looking at. My average, I believe, is 237 or just below 250. So not too exciting, but this is a way for me to trim my position as it goes up, and while still, holding some shares. And so these are just over the next couple weeks. 1 cent. If I look at the options table for calls, we got to switch back over to them. For $2.50 and $3, the bid price or the sell price is 0. So I don't expect those orders to necessarily be filled. That's why I have one for August 2nd, because one with let's see, what did I do for August 2nd? August 2nd, I did $2.50 and $3, or will do, they're red. But so if I look at August 2nd, $3, $2.50, 0. So, those also may not get filled, but just to place the orders and, maybe they get filled, maybe they don't. So that's kind of my strategy with Luminar, but yeah, I definitely plan on getting more heavy around 150. And if it does go down there, then, depending on what my funds on the side are, I'd think about, selling some cash secured puts, around $1.50. I think that's going to be a good price. And we also can see that we have been putting in higher lows. So $1.50 would still be a higher low. I'm, excited about that. Want to get more shares. And I'm just loving that we've been seeing this price action, but price is still, pretty low. It's less than $2 a share. So I think that's pretty exciting, pretty great. And then, the next one on the list here is MAXN. This is Maxeon Solar, MAXN. Nothing exciting with this. I'm still holding my 100 shares at a price of 24 cents. I plan on selling them by the end of the month or at either 10x or 100x my price. So at either, 240 or 24. Is that right? 240, 24. Yeah, so I don't necessarily think that's going to happen, but if you look at the chart, there's this gap here, right around 22 bucks. So maybe that happens, but again, it's just for the month of July, not going to hold it any longer than that. But yeah, I mean, maybe this is a fun one to participate in. I'm participating in it because of why not? But this is really like my only gamble on here. I feel like I'm some of the, I guess Fisker was a gamble and I screwed that up. But yeah, anyways, coming back to here, the next one on the options list is Plug. But if I do look over at the list here, I just went over Luminar. So now I'm going to go over NIO. And so looking at the chart, I'll go over the, buy plan that I have for NIO. This one, it's a little bit more expensive than the other ones, around the $2 range. So this is a little bit pricey for me. Not too exciting. But yeah, around 446. I just like to get up to 100 shares. I think I got, let's see, looking at this, 24. So I got 76 shares. I'd like to get that up to 100. And so my buy order will be placed at 435. And so the reason why I have it at 435, very similar to the other ones that I went over. Got this retracement here, the 7.8, so that's going from the low here up to this high. The 786 is at 433.3. Again, just rounding up in case it doesn't hit that exact price. 435. Maybe, on Friday though, we saw a low of 441. Maybe that's the low. But, I'm just going to place the order, set it, and forget it. Maybe it gets filled. Maybe it doesn't. I'll reevaluate next weekend. But yeah, that's what I plan on doing to get my share count to 100 for NIO. And so, yeah, not too exciting there. And then moving on to Palantir. This is one, I actually years ago had a bunch of shares, ended up selling them at the bottom, stupid mistake. Had a lot of belief in the company, always have had a lot of belief in the company. I feel like I was just doubting myself and my thesis, and, made a mistake with that. I've swung Palantir a little bit, but the reality is I feel that there's a lot of value in it. So I want to be accumulating a position, but I also just don't want to be like buying a share or buying tens of shares every week, whatever. And so I'm just trying to pace myself with this. I bought a share at $27 last week, I believe, just one share, nothing exciting, but I'd like to pick up another share. And so the price that I see potentially returning to, believe it or not, from 28.58, I could see it coming down to 26.20. So I'd pick up another share there, and that would also be getting my average down. So that is nice. So the reason why I picked 26.20, you can see it right here. This I just did this retracement, I believe, yesterday evening when I was planning this out, or maybe I did this at work today. I think I did it at work today. Maybe I did, yeah. I was bad. I was doing charting at work. Don't tell anybody. But yeah, so the low here, $20.33 up to the high of $29.83. With that Fibonacci retracement, we can see prices above the 236, 27.59. I could actually see price going down to 26.20 at the 382, and the reason for that is because of these confluence of levels. So that does intersect with a couple lines here. One being that purple line, which was this neckline for the head and shoulders pattern here, nearly got a measure move to the downside. Not quite though, but I think that is a level to be paid attention to. Also, this, let's see, downtrend here, we got rejected from it over here, had a tough time breaking above it, but finally did with force, and that would effectively be retracing to or returning to the scene of the crime. And so, yeah, I could see price coming down to 26.20 at that confluence of levels, and still, small averaging into a position, one share at a time. I could see price going lower, like to this red uptrend, maybe coming down to $25 a share. But, maybe I'm wrong. Maybe that doesn't happen. So this would be a nice way for me to, add a share every week based on levels I see price coming down to. Maybe it doesn't get filled this week. I'll just reassess next week. And so those are my thoughts with Palantir. And then the next one, this is one I do hold more than 100 shares of, but it's one that I feel like, now it's below my average. My average is, I think, around 274. It's below my average, so I could be adding more aggressively. I think I just have about 104 shares, something like that. So I could be, almost selling a cash secured put to add another 100 shares, but then I'd be still off by a few shares. So my plan with this one, with Plug, is to get 96 shares, get my position up to 200 shares, and the price that I am looking at is 245. I suspect that will get filled because, we've already tested it, and I suspect we will be hanging out around that level. Even before this announcement of the offering, I would have said that I thought that price would be coming down to the 786, just like I've gone over with all of the stocks, basically. And that 786 retracement is at 245.2, it looks like. Already gotten to that. I'm not going to be picky. And, the low on Friday was 241. Screw it. I missed the exact bottom. I'm just going to say 245 to get my position up to 200 shares. And then I could start thinking about selling a cash secured put for the following week, something like that. But yeah, so 245, that's my plan. I suspect we'll hang out down here before we start to go higher. And maybe, it bleeds lower. Maybe it comes down to like 220s. And, then I'd want to be able to pick up more shares. So don't want to get too aggressive right now, but it does seem like a good opportunity to get my average down, to add more to my position. And because I do have a position in it that's 100 shares, I am thinking about selling a covered call with a $3 strike expiring this coming Friday, and that would be for 2 cents or $2 in premium. And let's see if we look at the options table, calls here, $3 strike. And that's the reason why I have it at 2 cents, is because I can place that order before open on Monday, and then it just gets filled. I'm not sweating it. Maybe price goes up, maybe it bounces, and maybe I could make more on the premium, but maybe it goes down. And this way, I just basically loan out my shares for the week, collect $2, not that much, not very exciting, but it does add up. I'll show you that in 1 second. And then I get my shares back at the end of the week so I can repeat that. So again, it's not very exciting, but it does tend to work. And, my average is below $3 a share. So, if I had to sell 100 shares at $3 a share, it's not that big of a deal. I make some money. I lose 100 shares, but I make some money. So that's fine. I want to be in the cash making, the money making business, not the shareholding business. So, yeah, it is what it is. I'd rather sell at a higher price. I think it has a lot of potential to go higher, considering it just was at 334. But, that's just to collect that premium. And because my thesis is that price will stay down here for another week at least. And I think there was something else I was going to mention about Plug, but I seem to have forgotten it. Maybe about cash secured puts. I'm not sure. But yeah. 245, add about 100 shares to that. So, I just think this is a great example of the 786, and that this announcement really just kind of expedited that process, the drop there. So, I'm excited to add more to my position. I think it'll get filled on Monday, and then I'll just chill the rest of the week. But yeah, so that's it. Oh yeah, the thing I was going to show is, I have 0 right here. But, I don't expect all of these orders to be filled because a lot of these Biora ones don't get filled. But if all of these were to get filled, that's $71 right around there. So, and that's on a weekly basis, can be making, let's say these don't get filled. Let's say I make 30 or 40 bucks in the week, then I get my shares back, I repeat the process. Again, not very exciting, but it's a nice way to make a little bit of money and to take the emotion out of selling a stock if price does go higher. But my thesis for most of these, over the course of the next week, is that price will continue to go down a little bit more, but I think it'll find a bottom over the next couple weeks. So a couple weeks from now, I'd probably want to start to be more cautious. But right now, selling covered calls, I think is fine. And so the next one on the list, I'm just going to scroll up here, is, let's see, from this list that I have is, so I did Plug Power, then Rivian, and this is just one share at $14.85. I'll go over why I did that. And so I believe my average price for Rivian, I think this is actually pretty cool. I had set my buy order at 1635, one share. Again, nothing exciting. That got filled last week, and that was based on the high here from June 26, 1635. So that's why I placed the order there. I thought there might be some support if price did come down to there. And then also looking at this, Fibonacci retracement from the low here up to that high. The 236 is at 1636. So, it's right around that level, a penny off. So, confluence of levels, I feel like there's some nice support there. But again, thinking about confluence of levels, there are these other levels drawn here. I think price could be going lower. And the reason why I have 1485 is because if we look at the next level down, the 382 is at 1481. We do have some consolidation here. The top of that, I think that could act as support. And then just, rounding up to 1485. And so, hopefully I can add another share, get my average down. And if price continues to go down, I'm not sweating it. I don't have a large position, but I do have a position. So I'm excited about that. Rivian is a company. I live in a small town, a college town in Iowa. There's Rivian down the street from me. I see whenever I walk down there. I was just in Chicago, saw Rivians there. Also saw an Amazon delivery vehicle there, which is Rivian. And also, I was in LA. I saw Rivians. And so for me, the type of person that I am, I'm not like a sports car kind of person. I'm not necessarily like I need a truck to haul stuff, but occasionally I do like to haul stuff. I've done roofing on my house, working on the siding right now. I need to haul things every once in a while. And, I don't think I need something like a Cybertruck, but a truck like Rivian, very appealing to me. So this is like a vehicle that I'd really personally like to have. People have said they look like Pokemons. I think they look sleek. And so my dream, I guess, is to own a Rivian at some point. Now I at least own one share. I might own another share. That's pretty cool. And I'm just excited to see, where this takes me over the course of the years. This is not a trade for me. Same with Palantir, not a trade. These are, long-term holds. But anyways, coming back to this, the next one on the list is Rocket Lab. I ended up picking up a share last week at a price of, I believe, 516. I'm not sure why I chose 516. Let's see. The high here, very similar to, that analysis that I did with Rivian. The high here on June 24th was 516, and that order for me got filled, looks like on Friday. Glad to have that share, and I would like to add more. And so I believe I just arbitrarily picked $5, just being a round number, whole number, I should say. At the purple line here, and that is just above the 382 at 493.5. So that does kind of correspond with that, and so I could see price coming down there, maybe finding support with the tops over here, tops here, and maybe bouncing there. But if not, it's a very small position, one share. I'm going to have two shares if it gets down to there. I can add much more aggressively. But this is also, I think, one of the more speculative stocks that I cover. But also, though, I think that it's, when comparing to like Virgin Galactic, for example, I find Rocket Lab to be much more compelling. They have deals with NASA. They are sending, whether it's instruments, materials, I guess not people. I don't think they're doing people, but they're sending stuff up for NASA. They're having government contracts, I believe also private contracts. And, it just seems like there's a really nice application for Rocket Lab being an alternative to SpaceX. And, Virgin Galactic is not like that. That's luxury, space tourism. Rocket Lab is, freight, taking it up to space. And so, I find that compelling. I feel like that's investing in the future. And so I'm intrigued by that. Also, the community from the YouTube videos that I do is just so wonderful. I kind of wanted to partake in that as more than just somebody making videos, but actually as a shareholder. So again, like I said, just one share. So pretty lame, but it is more than zero, and I intend to add to it. But again, if $5 doesn't hit next week, I'll reevaluate next week. Next one on the list is SoFi. This one, I was kind of called out about the possibility of being wrong on this not going down to 6 or lower, and it only came down to 615. I think I picked up, let's see, I'm going to pull it up on my other screen, so I don't think you guys will be able to see it, but yeah, let's see. My SoFi position, I have one share at 645, and so, I'd be raising my average, if I buy at a price higher than 645. But, with this, big move up, I could see price not coming down to $6. I could see these gaps being left behind. I could see that thesis that I had being wrong. And, with this, this retracement, I could see price coming down to $7. It has that purple line there, and maybe that corresponds with a retest of this downtrend. Maybe price comes down lower to fill this gap around 650. But, if I get one share at $7, that's not going to screw up my average too much, and it's only a couple shares at that point. And so, I could add more heavily if it does come down, and, potentially with the idea of getting up to 100 shares. And so looking at this one share at $7, that's no problem. Yeah, so I'll do that because I think price is going to come down to there, but maybe it bounces from there. Maybe it doesn't come down to the golden pocket. Maybe it doesn't come down to 650. So that's kind of my strategy there. Again, I've had a lot of great interactions with SoFi. Some people being pretty angry with me about my thesis regarding their chart. But, it's a company that I also believe in as far as, student debt goes, just finance, stuff like that. I don't really know too much about all that stuff. But I think that SoFi is, the millennial Gen Z pathway to managing that stuff, or at least that's how I see it. And yeah, I find it compelling. Social finance, I believe is what SoFi stands for. Social finance, social media. So yeah, cool. But again, maybe not so cool, just one share, but it's more than nothing. And then the next one on the list, I believe, is Tilray. Yeah, 63 shares because I have, let's see, the opposite of that, 37 shares, I guess, which is pretty minuscule considering how cheap Tilray is, being below $2 a share. And so, yeah, I just want to get that up to 100. And I've talked about in many videos on Tilray, $1.70. And, if I look at the chart, we see here the 786 from this retracement is 169.6. So the 786, is right around, 170. So if it does come down to there, I'll get my share count up to 100. If it doesn't, I'll then reevaluate next week. And then maybe I'll place the order around the golden pocket at 175. But considering that price is right around 175, hit a low of 177, I could see there being more downside over the course of the next week. And, I'll wait for that. And so that's what I plan on doing to get that position up to 100 shares. The next one on the list is Unity Software. Just one share at $15. Not too exciting. I guess you can't see the ones I'm clicking on over here because Ed's there. I could move him, but I'm just going to leave him there. So, you can see, actually, I'll move him for 1 second. He'll swoosh out of the way. And let's see. So yeah, you can see Unity Software, and then Velo 3D is the next one I will go over. But yeah, bringing Ed back. Unity Software, I have one share at, let's see, I'm going to check my spreadsheet again. Just 1 second so I can see what my position is. 1569. And so I got that just because it's like, maybe it goes up and maybe that's the bottom. But, we've seen quite a pullback. On Thursday, it came down almost 10%. I could have, taken profits there, but my thesis is at least getting up to this midpoint. And so, I want to at least hold on until then. I only have one share, no big deal. And I could see price coming down to lower than $15 a share. But since we haven't yet hit that, 15.16 is the lowest point. Just place the order at 15. If maybe we get to 15.20 next week, and then bounce, maybe then that's a sign that, I should just add, lower than 15.69 to get one more share. But yeah, this is one that is just a pretty simple thesis, I think. And so I want to be adding more, while it's down here. With earnings coming up on the 8th, that should be pretty interesting. So I suspect I'll have more than just one share by then. And then the next one on the list, one of the final stocks, is Velo 3D. This is one that, I've been adding following this 1 for 35 reverse split. Kind of annoying. The options table for this one, it's only monthly contracts, so super annoying. I don't really like it. I'm compelled by the company, 3D printing of, metal parts, stuff like that. So I find that to be very, very interesting. But I just think that the stock's been beaten down, trying to get my average down while it is down. And so my strategy with this one is Velo 3D. Just pick up one share. I feel like it's pretty speculative not to get my average up to 100 shares. I think I have, let's see, I'll tell you. I've just got to, 1 second, switch over to my little spreadsheet here. I have 28 shares. So, I don't want to load in too much with this. This one seems pretty speculative to me. But yeah, that's basically, those are all of the positions that I plan on working with over the course of the next week. These ones to the downside, the commodities, whether it's natural gas, semiconductors, or the indexes, I don't plan on placing these orders. They're yellow because I don't plan on buying anything, so those orders are placed effectively. But yeah, I can just go over, my thoughts on natural gas, semiconductors, and the indexes. And so, thinking about natural gas, I'll go over that first. I'm not going to get into the commodity chart on TradingView, but I will go over the 3 charts that I have here. So looking at, and also one thing, I was trading initially BOIL, which is 2x leverage natural gas. Then I switched over to UNG because it seemed a little safer. But I feel like, you want that volatility with natural gas. And you just don't get it as much because it's not leveraged with UNG. You want to be in and out with it. You don't want to hold for too long. And so my thesis with natural gas, you're looking at UNG, which is going to be more similar to the price action of the commodity natural gas, is that it's retraced to these lows. B, Gareth Soloway, who covers this every day with his game plan on Verified Investing Channel, he established a small position here, planning on adding more if it dips more. But, I find it compelling that, he's established a position and I have not yet. I have previously been more aggressive, and so I've been wanting to wait and be disciplined before adding. Also, the price always tends to go lower than I expect. It tends to go lower than Gareth Soloway expects, even though he's like an expert trader. And what I see here is that price has been trading, in this downtrending channel. It hasn't really broken out yet. So I could see that it continuing lower, or maybe there's a breakout. But I just don't really want to be throwing a lot of money into this because I'm spread not necessarily so thin, but in those other positions, I don't really want to be shifting my focus away from that to then be getting into heavy with natural gas. But if I were to play natural gas, I would probably do BOIL because I would think that there's some, more volatility here. And I would think that $10 a share, the low here was $9.63. That could be a good opportunity to add a little bit to establish a position and then maybe add more if it goes lower, kind of following the steps that Gareth Soloway is taking in his game plan. I tend to watch those every day, so it seems like a nice way to do this with him as like my guru. And really, the thesis is, I don't know that it's reflected that well with BOIL, but with UNG, maybe, I'm not sure if it's coming. Yeah, it'd be coming back to, see, this is why the charts are a little bit different because the lows over here, BOIL's well past that, so it's a risky one. But with UNG, the thesis is it could be getting back to, there's this M formed. It could bounce to that M, which would be getting back, or the middle of that M there, that valley, that would be getting to around 1750. And so that's a pretty nice swing, but I'd rather be in and out quicker. And could capitalize more on the leverage of BOIL, and maybe this wouldn't get up to $16. That's $6. If one share at $10, whereas from here getting up to 17, that's not as much of a gain. So yeah, just getting up to this level here, 13. Yeah, actually, I don't know. Yeah, I just feel like BOIL is more of an in and out type of thing. And one thing, I don't have a position in this. I did have one share in this. I sold, I think I bought here and I wasn't sure it was actually going to get up there. I think I sold here and then it continued higher. I could have made money on that. It was just one share. But yeah, I just find that like natural gas, it tends to go further the wrong way. Like if I'm expecting it to continue higher, it ends up going low, but then it ends up going even lower than I expect. And then, when it's starting to maybe show weakness here, then it continues higher. So I just find it to be kind of like a theta killer or a an opportunity cost. It has a high opportunity cost. So I don't plan on doing natural gas, but this is one that when I start doing unusual whales, I'll probably be looking at the options, the flow, the open interest with Boyle, KOLD, this is 2x leverage short natural gas, and UNG, because I feel like there's a lot of volatility with these at times. And following the flow could be, a great way to trade this. And so I'm curious about natural gas. I want to follow it, but I just don't want to be putting too much into it, taking away from my other positions. And that's really like the same thing with SOXS. That is, let's see, switch over to the semiconductor tab here. That is a 3x leverage short semiconductors. We've had this nice bounce here. I think that we're going to see a top in semiconductors. I feel like it's not necessarily a popular opinion not a desirable opinion. People, semiconductors are the future, all of this stuff. Eventually there's going to be a top. Maybe the top is in here at 17, or sorry, I should say the bottom with SOXS. The bottom is in here at 1773. I have a position around, I think, $35 a share. I'll open up my little spreadsheet here so I can tell you how many shares I have. I've got 17 shares at an average price of $34.43. So, nothing too exciting there, but I do have that position. And my thesis is that really like in 2025, there's going to be a reckoning with semiconductors. And so my time horizon is longer than these other positions. So I don't really want to get distracted with shorting semiconductors just yet. I want to wait until I can focus on it more to get my average down, take profits or trim, whatever. And so I just don't see it getting up to 35 just yet. I could see it getting to like 27, right around here. And so, yeah, I'm a little bit cautious with this one, not adding to it. And similar to that, as far as the indexes go, looking at this, list that I have. So just went over SOXS. So SH is a short S&P 500. SPXU is, I believe, 3x leverage short SPX. And then SQQQ is 3x leverage short the NASDAQ. And so these basically same kind of argument with SOXS, very similar chart structure. I just don't think that the top is necessarily in just yet for the market. I think, the bubble is nearly fully formed, or it is fully formed, but it's not yet expanded enough to burst. So I am waiting, basically because of my time horizon is into 2025 for that. And so I want to wait, to establish my other positions more, take care of some bills that are coming up in September, October. After that, then, I'll probably be more comfortable with this. I think it'll be a better time to do that. But yeah, that's basically, all the stuff that I went over here, all of the tickers here, plus some more. Hopefully you guys found this useful. You'll have to let me know in the comments if you enjoyed this, which tickers you'd like me to follow up on. But this is basically the strategy that I do every single weekend. I go through an Excel sheet where I keep track of the covered calls and additions, shares, and in like a weekly addition I can add to that. And it's not necessarily that exciting, but it's a way for me to kind of organize and plan my week. And doing videos like this is a better way for me to be more accountable and to not just do boring one share additions, but go a little bit heavier to get up to that 100 share, being divisible by 100 shares. And then from that to be selling more covered calls and to be establishing more shares by selling cash secured puts, which I'll get into more next week, I imagine. If not, definitely the week after that, really just kind of depending on when I get paid, which is every other week. But yeah, I hope that this was helpful for you guys. You will have to let me know in the comments. If you did enjoy this, make sure you like it. And I should note that I'm probably going to make this video available to the public on Friday. So I hope that's all right with you guys as paying members. But I just feel like that's a nice way to kind of advertise this. And, it's after the week is over, so it's not really spoiling anything, spoiling the moves. But yeah, I just, I'm really excited about this channel, acting as a trading journal, engaging with you guys, sharing ideas with you. Let me know if you think any of these ideas are terrible. I'm sure some of them are. I appreciate your criticism, your critiques. And yeah, I'm really excited for the week ahead. And I hope you guys are having a wonderful weekend and that you find this members only video to be a help. Thank you so much for joining. Thank you so much for being members. And I will talk to you later. Take care, you guys.